Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1352, and today's date is August 8th, 2017, and the title of the episode is Russia Says It's Ready to Cut Their Dependence on the U.S. Dollar. Let's get into the economic collapse financial news. Now, as we've been following this economy, we are starting to see very similar patterns, not here just in the United States, but around the world. I mean, if we look at real estate, we can see there are major problems in all different areas, not just the United States. We're looking at Canada, UK, Australia, and we're seeing that the same pattern is evolving in these areas where the real estate market, well, it has been blown up into this one gigantic bubble, and we can see that the bubble is about to pop. When we look at what retail is doing around the different parts of the world, we can see there's the exact same pattern where they're having a problem with retail. When we look at the unemployment numbers, we see the same exact thing throughout Europe. There are many countries with very high unemployment, and if we look at debt, well, we know that debt is pretty much the same almost every single place. And out in the UK, we can see that British retail sales, well, they grew a lot more slowly in July, well, than they expected. And shoppers now are cutting back on non-essential spending. We're seeing inflation in these areas. And we're starting to see, again, the same pattern in all different areas. Now, here in the United States, we see that the growth of jobs, well, it has slowed dramatically. Now, corporations, they're out there telling us that they have a lot of job openings. And I explained this once before, where a lot of corporations, they have these open recs and they interview a lot of people and they say, well, you can't fill it right now because we're on a freeze. Now think about these corporations. Yes, they're talking about earnings and how earnings are up, but sales and revenue, well, that's just not coming in right now, and they can't fudge that data. So what they've been doing is this, they've been using these tricky accounting methods. They've been buying back their stock, and we're starting to see that they're out there trying to convince everyone that they have all these jobs, these high-paying jobs. There's just no one to fill these jobs. If that is truly the case, we have all these college graduates coming out of school. They're graduating. They can't find jobs. They have these huge student loan bills that are due. We also have something like 100 million people that have fallen off the job market, and all the jobs that are being added to the economy, they're all part-time, waiter, waitresses. You're trying to tell me there's just nobody out there who wants a job? No, what's happening right now is that these corporations, they're really not making the revenue. They're really not making the sales out there. And we're actually seeing a decline in the annual growth rate from 6.2 in May to 3.5% in June. The hires rate was 3.7%. The number of hires was little change for total private and for government. And the number of hires, well, it is decreasing. Now, we've seen this pattern before. If we go back to 2006, 2007, all of a sudden, we're seeing that we've hit this height where all of a sudden the pace of hiring slowed, and then it started to fall, and all of a sudden we entered a recession. So we're seeing the same exact pattern that we once saw. Now, if we look at something very, very closely here, and I'm talking about the U.S. credit card debt. Now, in troubled times, people like to use their credit cards because they don't have the income coming in. They can't find those high-paying jobs. They might have one or two part-time jobs, and they start using their credit card to make ends meet. Now, the Federal Reserve, they confirmed that as the end of June, total revolving credit card debt rose to $1 trillion, an increase of $4.1 billion on the month. This is an all-time new high, taking out the previous record high set during the summer of 2008. And what happened in October of 2008? Well, everything completely fell apart. Now, when we take a closer look at the quarterly update in non-revolving debt, we find that for another consecutive quarter, both student and auto loans hit a record high of $1.450 trillion and $1.131 trillion. And we need to remember something very important here. In order for the Federal Reserve to continually to push their agenda. I mean, every single central bank, their agenda is debt. They want everyone to take on more and more debt. This is part of their system. And this is exactly what we've been seeing over the last 8 years. Think about it. They push the debt to the extreme right now in credit cards, in auto loan, in student loan, in mortgages, in global debt. And when we look at this, we can see that if this economy is at full employment and everyone is doing well and everyone has these fantastic jobs, we wouldn't see all of this. We wouldn't see the delinquencies. We wouldn't see all this debt being loaded up on. But when people don't have the money, they resort to debt to support their daily lives. And this is exactly what we're seeing. Now, we know that the central bank, the Fed, they've done these stress tests. And they found that, don't worry, the U.S. commercial banks, they have enough capital to survive even an adverse stress scenario. Now, we know these tests are completely fake, phony, and false. But what they did find out is that the two big U.S. mortgage giants, well, they didn't do so well. And Fannie Mae and Freddie Mac, they released today by their regulators that they are going to be in a huge amount of trouble if we enter another crisis. They're going to need $100 billion in bailout funding if there is some type of economic crisis. Now, we know there's an economic crisis coming. We know there's going to be problems. And we can see right now that if the housing market starts to decline, or if we enter a global recession, believe me, it's not going to be $100 billion. It's most likely going to be about 5 times that amount. Because this is what we saw back in 2008. Remember when they said, oh, AIG is only going to need one bailout? Oh, we're just going to need this small little bailout for all the banks, and the number kept on going up and up and up. And then we realized that the Fed covertly has been giving bailout in the trillions to many banks around the world. So we know that's completely fake, phony, and false. We also know that corporations are in trouble. Actually, the corporate leverage has never been higher right now. The ratio is at the highest point since the financial crisis. Again, this is a major problem. And when we start to look at the entire economy right now, we can see from all these economic indicators that there are major problems. There are problems all over the place. And the central banks, they've been busy in the last 8 years or so. They've just been covering up every single part of it to make sure that everyone doesn't realize what is really happening right now. Think about all the things that we've discussed already. The federal tax receipts declining, the state tax receipts declining, corporate debt rising. We see that the corporations, they're leveraged like we've never seen before. Delinquencies are rising. The debt load on individuals using credit cards, auto loans, student loans, the highest we've ever seen. Unemployment rate is completely manipulated, and there are so many people out of the workforce, it is absolutely ridiculous. And we see countries around the world where they are separating themselves from the dollar. Slowly but surely, they are doing this, and they've been doing this for quite a while, and they've been ramping up on gold. Now, Russia has decided they're going to speed up work on reducing its dependence on the U.S. payment systems and the dollar. So they're not going to be using the dollar as the settling currency anymore. Now, this is coming from Deputy Foreign Minister Sergei Rybakov. He said, we will, of course, intensify work related to import substitution, reduction of dependence on U.S. payment systems, on the dollar as a settling currency, and so on. It is becoming a vital need. The reason for that is that the U.S. is using the dominating role in the monetary and financial system to impose pressure on foreign business, including Russian companies. Now, they've been doing this way before the sanctions, but they decided to speed it up because they want to be separate and apart from the dollar, because if they end up doing this, which they are doing, these sanctions are going to be meaningless. Now, think about this for a second. China is working with many different countries around the world for this Belt and Road, Silk Road system. The trade that they're going to have throughout the system is going to be separate and apart from the dollar. all these countries are going to be using either their own currencies, the ruble, or most likely the yuan or the renminbi. Now, once they start doing this and this system is operational, fully operational, the dollar, well, it's coming to an end. This is why all of this is happening right now, because this fiat system that has been running on the petrodollar, which they're dependent on oil, is coming to an end. Look what's happening in the Middle East right now. The empire building of the deep state, well, that has gone nowhere. Actually, it's all reversing right now, and it's falling apart, which means all these countries, they're not going to keep the dollar anymore. They're going to look someplace else. These countries are going to make deals on selling their oil, not using the dollar. Remember, back in 71, Kissinger went out there and he established this entire plan. This plan is at its end stage right now. And this is what happens during a transition. And as we move through this transition, it's going to get worse before it gets a lot better. This is why we've been saying get prepared, get ready, make sure you have your food, make sure you have your water, make sure you have your toilet supplies, make sure you have gold and silver, make sure you have cash on hand. Now, the reason why we're saying all of this is because, not because it's going to be a Mad Max scenario. Now, there might be certain areas where it gets out of hand, maybe in the big cities and those congested areas. The reason why we're really saying this is because as inflation hits, and as people become desperate, you don't want to be running to the market to try to figure out what you're going to do, what your game plan is going to be. You'd rather be prepared to say, you know something, I don't need to go into those crowds right now. I don't have to fight for the food. I don't have to fight for the water. And as we go through the transition and things get worse, you don't have to worry about it. You can sustain yourself for a certain period of time. And if you have cash on hand, you don't have to worry about that bank holiday where the banks close down. And they tell you, and this happened in Cyprus, happened in Greece, happened in many different areas where they said, listen, you're only allowed to withdraw this amount of funds. You can't transfer your funds outside of the country. You can't do anything like that. So you need to use your cash on hand in the beginning stage. And as we go through this transition and the currency is going, is in this transition state where we're moving to a different currency, you need to ensure your wealth. How do you do this? Well, some people are saying cryptocurrency. I still believe it's gold and silver because it's physical. It maintains, it sustains its value over a period of time. This is going back thousands and thousands of years. You can try it with crypto. That's something that you might want to have in your portfolio to ensure your wealth. But I would say gold and silver at this point, because when this new system comes online, just like back in the 30s, back in the after World War II, if you had gold, it was basically recalculated to the new currency. And this is what you want. The new currency, it's going to be recalculated, and they're going to tell you, okay, if you have an ounce of gold, it's going to be this number of currency places that you can trade it in for this new currency, and you can use this new currency to go purchase things. So again, this is going to help you in the long run, and this is something that you're going to need. And you're going to need all of this, and you want to be one of those people who is prepared and ready. And once we start coming out of the other side of the transition, and again, some people say it's 6 months, some people say it's a year, some people it's going to take a lot longer than that. But no matter the time frame, make sure you have a way of protecting and sustaining yourself for that period of time. And this is why you need to be ready and prepared for this transition. And listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.